9 FM, the Money Matters Radio Network. You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. Our guide this month is titled Retirement Tax Efficiency. Mike, when people retire, what are some of the biggest surprises that they receive in the tax department upon retiring?
Well, most folks end up avoiding it, but for a lot of people, when it comes to Medicare, there can be a little bit of surprise when it comes to how those premiums get calculated on a year-to-year basis.
What types of things can factor into where those premiums end up in any given year?
Yeah, so there's something called IRMA, which stands for the Income-Related Monthly Adjustment Amount. And long story short, they base your Medicare premiums on your combined income, but sometimes that you don't really think about items that fall into your income. So let's say you raised your family in this home, and somewhere in the Northeast you end up selling it, and you end up making more than $500,000 on it. Or maybe it's a parent's property or a big stock or a big retirement package. You can actually see your Medicare premiums take a severe adjustment. And that's almost never income that people are thinking about. Like, no, I sold my home. Why should that factor into my Medicare? Well, it can in certain circumstances. And so it is just one area that we look at to say, hey, this is a surprise because it's a tax that nobody faces until they turn 65.
Our guide this month is titled Retirement Tax Efficiency, and there are 2 different ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here, and a couple of consequential earnings reports after the bell yesterday have stocks in negative territory. And so we're going to kick off our show with a discussion of those earnings. We'll start first with Google, or rather their parent company, Alphabet, still arguably the dumbest name change out of any of the companies that have changed names in the past several years. Meta you can rip on because...
A lot of competition there.
Hey, look, they changed their name, from something everyone knew to, something that they wanted everyone to know, but at least it was relative to their business, or relevant to their business. Yeah, we're trying to get into the metaverse. Okay, you're changing your name to Meta. Might not agree with it, but fine, I understand the logic. Google changed their name to Alphabet for reasons that are just unknown. And no one actually calls them Alphabet. Everyone still calls them Google because Alphabet's a dumb name. That's how you know that a name change is dumb, is when no one calls them by it anymore. Exactly. And so you've got them reporting earnings, name change, regardless of that. And their earnings were good. Let's be upfront about it. The earnings were fine. Like, there weren't any major problems. They're still hugely profitable. They reported total revenue growth of 13.5% to $84.7 billion. They had $23.6 billion in net income, up 28.6% from the same period last year. So, by all accounts, good earnings. Here is the problem, is the stock is down about 4% in early trading, and the reason why is twofold in my opinion, Mark. The first is, when you look at how the company has done this year, it's up 30% year to date. And so if you've already rallied 30% year to date, and in the last 12 months, when you've rallied 51%, hey, if your earnings are growing at 28% year over year, but you're up 51%, that means that most of the growth, or at least about half of the growth in your stock price, is not because your company's making more money, but because investors are willing to pay more for the money that your company is making, which means you have to deliver better earnings than they expect. Otherwise, your stock gets more expensive.
This is the so-called Red Queen effect, I think, and it afflicts right. Kennedy talked about this. You have to, the U.S. He's talking about it in the context of the U.S. economy, but you have to run very fast just to stand still.
Yes. Yep.
And I think that is a reference to Alice. I never read the book. I don't even think I saw the movie, but that's a Alice in Wonderland reference. Anyway, this is a problem with many in the Mag 7 and elsewhere. These spectacular growth expectations are already priced in. So if that growth either isn't realized or the path becomes narrower or somehow more ambiguous, then naturally investors are going to flee, causing multiple compression, which sounds innocuous enough, but it means a sharp fall in stock price.
By the way, the Red Queen hypothesis actually first proposed by evolutionary biologist Lee Van Valen. in talking about how animals have to consistently change in order to stay ahead of predators and things like that. So that's where it originally comes from, I guess.
Okay.
In any case, the other piece that is going to be troublesome for the Googs is the fact that their capital expenditures were $13.2 billion in the second quarter. That's up 91% from the same period a year earlier. So they basically went from spending like $7 billion in CapEx a quarter to 13. They also said they're expecting to spend at least $12 billion a quarter in CapEx through the end of this year, and that is all due to the increased spending on chips and servers and all the capacity needed to build out these AI models that at the moment are contributing next to nothing to revenue. So you're spending a bunch of money, you're not bringing in additional money at this point, and that compresses margins. And so that's cause for concern as well, which is, hey, there's all this AI hype about, oh, look, we can write sonnets now using AI, and we can make a picture of a mouse pointing a lightsaber at a tuna, and that's great, but ultimately, how's that going to make us money? It's a real question, and I think that this is what these companies are going to have to reckon with, which is, yeah, AI can do some kind of cool stuff, actually. Like, I'm not going to just poo-poo AI, because I use some of these things on a daily basis, but at what cost to end users are they able to offer these products? And how do you actually build a business out of it, not just, we made some cool stuff?
And is there any evidence, this sector and these companies much better than I do, is there any evidence that what other companies are spending on AI is making a dent on Google's ad share? I mean, their core business, as you pointed out at the open, seems to be humming.
It is. And, there's a few of these different, new search engines that are using AI to generate, previews and do this and that and, AI-based search. But honestly, a lot of them are garbage, and some of them are even borderline plagiaristic in terms of how they're approaching things, where they're not.
How can it be otherwise, right?
Well, they're not even properly citing sources, or they're citing like a secondary source.
I guess what I mean when I say how can it be otherwise is they don't acquire this knowledge by going to college. They're just going out and getting it off the web, which by definition means they're stealing something somebody else has put on the web.
It's true.
Is that an oversimplification?
I think it is, and I do think that it's not necessarily fair. And
Feelings are
here's,
a little hurt, but
well, here's why. Let's say that let's take Alice in Wonderland as an example. Let's say that I read Alice in Wonderland, and I say, you know what? That Lewis Carroll really had it together. I want to write a book really similar to that because that inspired me. Do I have to pay royalties to Lewis Carroll when I write that book? The answer is no, I don't. I read the book. And then I might write, the book could be called, Darren in Wonderland. And ultimately, if it's foreign, as long as I'm not like violating, copyright and trademark, it's okay, like fine. There's no issue there. Because every writer in history, every person in history has been inspired by someone who came before them. So the question that I think is out there is, hey, if you have an AI large language model that is kind of doing the same thing, where it's, hey, it reads this and then it says, you say to it, okay, I want to write something in the style of this person using like this kind of theme and this and that. Is it something where you would owe that person money just for being inspired by them if the AI writes it instead of you writing it? I don't necessarily think so. That's at least how I would look at it. Now, obviously, if you say, hey, write me a book about Mickey Mouse, you're going to owe Disney a whole bunch of money because you're violating X, Y, and Z. But we all get inspired by something. It's just a question of does the computer write it or do I? We've digressed a little bit, but I'm just not sure there's any there in terms of how that would impact things from a monetary perspective. But getting back to Google's earnings, they're good. It's not a company that's going out of business. They haven't been displaced by, all these other AI search engines. Their ad business is fine. They're showing some slowing revenue growth in the areas like their YouTube revenue is only up 13% year over year. That was pointed out as a cause for concern. So they've got, some areas that are slowing a bit. But when you have a net profit of $20+ billion for a quarter, I'm not going to sit here and be like, well, they've got some real problems. No, the company's fine. It's just maybe the market got a little bit too excited about the AI hype. And so maybe the stock price has some, work to do in sorting out what's real and what's just hype. I think that's a fair way to look at it.
That's as plausible an explanation as I think you're going to hear.
On that, let's take a quick break. And when we come back, we'll talk about the second major company that reported earnings after the bell yesterday. That is none other than Tesla, or Tesla as they're more commonly known. So we'll talk Tesla earnings when we return.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
Tax-efficient retirement planning starts with taking proactive steps to minimize your tax burden while you still can. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and as you approach retirement, it's crucial to consider the impact of taxes on your future finances. This month, our new guide is called Retirement Tax Efficiency. In it, we cover a variety of key areas from Social Security and life insurance to capital gains tax rates and Medicare brackets. The guide is designed to help you build a solid retirement financial strategy that limits your tax liability. Get your free copy of our new guide, Retirement Tax Efficiency, by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Last year, we introduced you to Marc Vaughter, CEO of Veterans Development Corporation. Marc is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I joined the Marine Corps when I was 18 and served proudly from 1981 to 1984. As CEO of Veterans Development Corporation, my goal is to give back to the veteran community, many of whom are employees of this company. This is one of the reasons I am so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K Boston. The DAV works tirelessly to support many of our disabled veterans and provide them access to critical services that help them live comfortably every day. I hope to be part of many more success stories of our vets being able to achieve their goals and dreams when their service ends.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Tesla reported earnings after the bell, and what they saw is concerning. And here's the deal. First, they missed on earnings estimates. They came in at 52 cents a share compared to 62 cents expected. They did beat on revenue by about 3%. That was an unexpected move upward, where revenue increased 2% from a year earlier. But it was largely due, or basically all due, to a tripling in the regulatory credits that they sold to other automakers who are behind on emission standards and need to buy these credits from someone who's ahead in order to meet federal emission standards. So their actual car sale revenue dropped by 7% to $19.9 billion. This comes on the heels of another quarter in which they saw negative growth or a shrinking of revenue in that segment. And anytime your core business is shrinking, it's problematic, and it's especially problematic when you are valued the way Tesla is, nearly 100 times forward earnings. And so this is something that has Tesla stock down about 12% in trading today.
So how should it be valued, I think, is the question I struggle with. Musk desperately wants you to think of it as a technology company, right? This is all about their investment in autonomous driving technology. That would merit a higher valuation. I don't know if it merits 100 times forward or 68 times trailing 12-month earnings.
And Elon said as much himself. He's basically said, look, if you're betting on Tesla, you're betting that we're going to nail autonomy. Like that's not his exact quote, but it's pretty darn close to it.
Yeah.
And I think that is how you have to look at it, because car companies don't get valued this way. They don't all get valued like Ford, but even if you look at Toyota Motor, just as an example, Toyota is the largest automaker in the world. They're worth about they are currently worth in market cap right now about $267 billion. They do about $300 billion in sales. So they trade, 0.8, 0.9 times sales, and their PE ratio is about 8, which is fine. They have, relatively good margins in an industry that's known for having, 3 to 5% profit margins historically. Theirs are around 11. And so they execute well. And this is even, on the back of, hey, they have their own problems with, a number of recalls they've had to make and this and that. So it's not to say that they're excellent at everything, but they're still kind of the gold standard for automakers in terms of how they're valued by the market. Tesla valued completely differently, and has to be because you think they're going to nail these other things, which have proven to be really, really hard to do. And even yesterday, Elon Musk saying, look, we do think we're going to be able to have this. You said I would be shocked if we don't have, these new robo-taxis operating by the end of next year. And he said it would be a more robust system than what's offered by Waymo, which only works in select cities. He said this would be able to work anywhere and everywhere. Now, what you have to weigh on this, Elon's made some pretty strong claims before on autonomy. Back in, I forget if it was 2016 or 17, he said that they would send a car cross-country in the following year with no driver. They still have not done that, 7 or 8 years later. So there have been a number of claims that have been made on the autonomy side of things that simply have not happened. And so this is the trillion-dollar question with Tesla is it different this time, and do they have autonomy nailed because of these investments in a whole bunch of, compute power and things like that? And it is a moonshot in terms of the potential payoff, but also the risk is huge to the business as well. And quite honestly, in the auto business, once you start having declining sales, it kind of creates this negative snowball. And there is a remote possibility that this could be the start of a real problem for Tesla that plays out over the next 3 to 5 years as well.
When you don't produce the, say, AI, the tangible, the concrete developments in AI and in robotaxis getting postponed again, when you don't produce concrete developments there, and that's coupled with amplified hyperbole, like Tesla should be a $5 trillion stock, or some other carnival barker line that Musk is prone to make. So when you get this extreme hyperbole coupled with disappointing results, antennae do go up.
Yeah, and so this is going to be something that is, again, it's going to be a battle for Tesla over the next several quarters, because you now have 2 quarters in a row of declining sales, and companies with declining sales are not usually priced the way that Tesla is. So there is going to be some pressure on Tesla to show something with autonomy when they have that October autonomy day for the robotaxi unveil. It was originally supposed to be in August. It's been pushed back 2 months now to October, if my math is correct. It is. And they're going to have to deliver something concrete there. And by something concrete, I don't mean, hey, we're ready to sell this right now. But there needs to be something there in terms of, hey, here's exactly how we're going to do this, and this is the timeline, and then we need to execute on that timeline, because if it keeps getting pushed out, eventually the markets are going to wise up to it. They haven't to this point, but eventually they will, and they're going to start pricing that probability of true autonomy from Tesla in at a lower rate, and that's where things get potentially really hairy for them.
Yeah, and how much of that multiple, that difference in price to earnings relative to the other big automakers and similarly situated companies, how much of that represents, I was going to say blind faith in Musk. It's not really blind faith because he's proven to a degree, though he's prone to these flights of fancy.
Yeah.
How much of that is about him? And if people lose confidence in that, hasn't happened yet, doesn't even, there don't even appear to be whispers of something like that. But if people lose confidence in his vision or in his grasp of reality, that all comes crashing down. That excessive multiple comes crashing down.
I would say probably half to 2/3 of that is due to him. And I'm just comparing it to, again, another upstart right now. You look at Rivian, who's in that space, and they're one of the few upstarts that is at least still alive now from companies that were born 4 or 5 years ago in the EV space. Most of them have just gone belly up. But even Rivian, they're not profitable, so they don't have, any forward PE ratio because they're not even projected to be profitable for the next 2 years. Price to sales, they're trading 3 times sales. You take a look at Tesla, they're trading right now 8 times sales. I would say that that difference there, that extra 5x multiple on sales, is probably the Elon effect. Again, I'm just trying to make sense out of what's going on here, but Tesla is, again, they're a profitable company right now. They are still selling a lot of cars. They're going to sell almost 2 million vehicles this year, so it's not to poo-poo them and say, hey, they're a horrible company. I don't think that. But when you are priced this way, you have to deliver above and beyond what people are expecting, and this was a quarter where they did not do that, and they missed earnings expectations, and that's why they're being punished today in markets at the moment. So they've got some challenges ahead of them. They've had these before. When they were first rolling out the Model 3 back in 2018, 2019, Elon said, look, this is going to make or break us, and they ended up executing, and they came out of that a stronger company. Can they do it again? Because they've got to have a similar type of execution to really nail this in the next couple of years, and that's the open question. Quick break here. When we come back, Wall Street Watch, and then we're joined by Todd Lutsky for Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable and it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutsky and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can simply request the guide from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are selling off as Wall Street digests more second quarter earnings, including underwhelming results from Tesla and mixed results from Alphabet. At the moment, the Dow is off by nearly 1% or 350 points. S&P 500 down nearly 1.5% or 79 points. And the NASDAQ off now by 2%. Russell 2000 is off by 0.75%. 10-year Treasury yield is down by 1 basis point, now at 4.22%. And crude oil up about 0.5%, trading at $77.31 a barrel. As previously discussed, Tesla shares down 12% after the electric vehicle maker missed street forecast and posted its second consecutive decline in profit. Shares in Google's Alphabet down by 3.5% after the company did beat earnings expectations but raised street concerns about heavy spending on AI and slowing ad sales growth. Elsewhere, AT&T beat street forecasts on key metrics like net phone subscribers. The telecom company also maintained its full-year outlook, sending shares up by 3% today. Meanwhile, Visa down by 3% after the credit card company saw its quarterly revenue climb, but still fell below analyst forecasts, sticking with finance, where Capital One also missed revenue expectations. However, that stock is actually up by 0.2%. Over in Europe, luxury goods company LVMH missed expectations due to weakness in high-end spending in China. That stock down by 1%, while other fashion brands are also seeing sympathy losses. And after today's close, we'll see second quarter results from IBM, Ford, and Chipotle. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we are now joined by Todd Lutsky from the law firm of Cushing & Dolan. We call the segment Ask Todd because it is your chance to ask Todd your estate planning questions. I know there were a couple that we had queued up last week that we couldn't get to, so the phone number here is 888-205-2263. If you happen to be one of the people who was waiting to ask a question last week, here's your chance to get at the front of the line. That number again is 888-205-2263, or hey, maybe you weren't waiting last week, but now you say, yeah, I've got a pretty good question for Todd. That phone number one more time is 888-205-2263. So get calling, and we will be getting to your questions as we go through the segment. Again, it's 888-205-2263. Mr. Lutsky, how are you today?
I'm great. How are you?
I'm okay.
Yeah, I'm always afraid to ask.
I had a bit of an accident the other day.
Yeah. Are you all right?
I was opening a can of the alphabet pasta.
Oh, yeah?
And wasn't injured.
No.
But it could have spelled disaster.
Well, it could have. Yeah, that's very true.
So, very fortunate on this. Todd, let's talk a little bit about last-minute planning for Medicaid in terms of the tools that are available today.
Yeah.
Let's say that you are someone or you know someone who is concerned about a potential nursing home stay or other long-term care situation. There hasn't been any planning done.
No planning.
What can you do as you're heading into that situation imminently?
Should we discuss it, narrow it down maybe to a single or a married couple?
Let's do married for now first. Let's start there.
Okay, so married, you have better options, right? So people thought, it's no good being married. Look, there's a positive here. If you're married, the home, first and foremost, if located in Massachusetts and the spouse, the healthy spouse, we call them the community spouse, is living there, then the house is non-countable and non-lienable, which is nice, meaning it doesn't matter how much it's worth. It doesn't matter whose name's on it. It's just non-countable and non-lienable. So it's not going to disqualify you from nursing home or make the community spouse homeless. So wipe your brow. However, let's say this couple just has the home.
Okay.
And money. No other real estate.
Sure.
If there's no other real estate, we're left with money. Well, what do we do with money? With money, the government allows a healthy spouse to keep something called a community spousal resource allowance of about $148,000 in change. So all the money, doesn't matter how it's owned, and this is what's important about a married couple, right? It doesn't matter that one spouse has all the name, is in all one's name, or if it's joint, or if it's in the sixth spouse's name. It doesn't matter. They all get dumped on the table into a big pile, and they allow the community spouse to reach in and take out $148,000 and stick it in a bank account. And that would be non-countable. Community spouse gets to keep that. I know it's not a lot of money to live on the rest of your life. Everything else gets scooted over into what we call the institutionalized spouses bucket. If that institutionalized spouses bucket exceeds $2,000, then you're going to be denied Medicaid. Well, that's not helpful because let's say in this case we've got $500,000. Well, we've only carved out 148, and you get to keep 2, by the way, so that's 150. Well, what are we going to do with the 350 that's left? Well, that's excess resources. So one thing you're allowed to do is you're allowed to transfer excess resources to a community spouse. It's not going to create a disqualifying transfer. It's also not going to help initially. However, then you take that excess resource and you buy something called a Medicaid annuity. It's quite magical that it converts the asset to an income stream for the healthy spouse. And the moment you buy that annuity and make that conversion, you've now met the financial eligibility needed to become eligible for Medicaid. So that's one way to do it.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. Again, this segment's called Ask Todd, so it's your chance to ask Todd your estate planning questions live on the air. The studio line here is 888-205-2263, so get calling that number. Again, it is 888-205-2263. We still do have space for a couple more. So, again, 888-205-2263 is the number to call to ask Todd your questions. We're going to take a quick break here, but when we come back, it is right to your questions with Todd Lutsky. That phone number one last time is 888-205-2263. Quick break. Your calls after this.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zodda from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
All right, we got a couple calls for Todd Lutsky. Let's go first to Kevin on the road. Kevin, what is your question for Todd? Kevin, are you there?
Hello, yes, I'm here. Hey, my question is really to do with long-term care insurance.
Yes.
I've opted for a revocable trust and put that along with long-term care, and I thought that would help to protect my assets from the nursing home in the event that would happen.
Yes.
Can you comment on the merits and or pitfalls of that approach?
Yeah, I think, and stay on the line because I got a couple of follow-up questions because this is true. And by the way, folks, I like long-term care insurance. I know we don't talk about it a lot. It can be expensive. You got to get it when you're younger. It does work. It is not a bad part of the equation. I say part because sometimes it's not enough, and that's okay. Something is better than nothing. It might have in-home care. It might have some other benefits that it offers you. Maybe, and there's these hybrid policies that are out there that offer you a death benefit if you don't use it for long-term care. So I think it has a very good place in the estate planning world. So let me start off with that. But my question is, do you know what this policy pays out per day, per month, and for how long?
Yes. Actually, the reason why I opted for it was the payout was substantial. Now, substantial in today's numbers, right? I think it would cover, and it covers both my wife and I, I think it's in excess of $7,000 a month each.
Okay, and that's normal. I was going to say about $200 a day is $6,000 a month, and so you're a little more north of that. Say $7,000 a month. That is what we call a normal everyday, not a Cadillac policy. And not everyone needs a Cadillac policy. So $7,000 a month, and it probably covers 3 years or 5 years.
It's. I'm sorry for the.
Yeah. Does it cover three years or 5 years?
It's 7 years actually.
Oh, it pays out for 7 years?
Yes.
Wow, that is a much bigger policy than I'm used to. So I like that. 7 years. I'm sure it has in-home care and all those other perks. Now, that's nice, except here's why I don't know that it is the end-all, be-all. It's helpful, but nursing homes run, every bit of $15,000 a month. So you're covering maybe half the cost of the nursing home. Now, I don't know your assets. Maybe you have enough other assets to generate income to make up the delta. If you do, I think you're on the right track. I think it's probably a combination of being partly self-insured, coupled with long-term care insurance, revocable trust planning, you're on the right track. But not knowing your entire estate plan and what your assets are, someone with $7,000 a month coming in, and let's say they're worth $3 million on their own, I might still ask them, well, we have to do trust planning anyway. Why not set up the irrevocable trust to protect the assets and still keep my long-term care insurance? It's certainly helpful, but at least I won't have to touch the assets to make up the delta. And who knows if the premiums go up too high and I can't afford it, and at some point I have to get rid of my long-term care insurance, I've got the irrevocable trust in play to protect my assets, avoid probate, and shelter my assets for estate taxes. So I think there's no wrong answer here. I think you're doing something is way better than nothing. But keep in mind what I just said and put your own numbers to it and see if it makes sense to say, you know what, I'm not really enough self-insured that I should go it alone. Let's get the irrevocable trust or learn about it. So, folks, that said, this is helpful. And even for people who do planning, irrevocable trust planning, and for people who don't, there's always some assets outside this trust if you have done your planning. And, of course, there's a lot of assets outside the trust if you've done none. When you're faced with the nursing home care, this guide is good for both of those types of people. When you're entering a nursing home, last-minute Medicaid eligibility is the guide. We're getting near the end of the month. We want to get this guide in your hands. Don't apply for Medicaid alone. Learn how to make countable assets non-countable last minute. Don't write the check. Learn how real estate works, rental versus homes versus jointly held property. Oh, by the way, and married couples and single people, assets are treated differently. Learn how to get on Medicaid last minute, even if you've not done your planning. 866-848-5699 or legalexchangeshow.com. Get last minute Medicaid eligibility guide, 866-848-5699 or legalexchangeshow.com.
Todd, I've got another caller for you. Let's go to Charles in Westboro. Charles, you are on with Todd Lutsky.
Thank you. Hi, Todd. We have a irrevocable trust, grantor type that you wrote about 8 years ago.
Okay.
We own our own home right now. It's in the trust.
Okay.
We're buying another home. We're basically buying the home with personal funds.
Okay.
And I want to know, when it comes to the signatures, we have two trustees, our children. One is basically in this area. The other one's a pilot for airlines, and he's hard to track down.
Yeah.
Do both of them have to sign when we do a closing on the present house? And also when we purchase the new one to keep them in the trust?
So a couple of questions I got to follow up on to clear this up. So one, the money you're using to buy the new house, is that located inside the trust? Is that already trust money?
Some of it.
Okay, so
Some
this
of it.
this is are you going to be getting a mortgage?
No.
Okay.
No, it's all being covered with personal.
Great. No mortgage, personal money. First thing you need to do is transfer the money that you need into the trust, okay, to add it to the other trust money, okay? That transfer will create its own 5-year waiting period, but only for that piece that you put in, okay? The other money that's in there, it won't. And then what will happen is, yes, you will have the money go out of the trust and the new house come in. Now, the two-signature issue, yeah, I don't love it, right? I don't always love having two kids as trustees because it can create this, it's a little harder to do things. You don't always have to have two kids. So, Mike, if you, rather than chase this, yes, you're going to need two signatures. My advice would be, let's remove one child for now, have one child on, complete the transaction, and then add the child back as trustee if you really want to. And that way you won't need to chase down that signature. So that would be the way to get around the two-signature problem that you have. And I think that is really the answer. And the good news here is this shows a lot of people how flexible these irrevocable trusts are. You want to buy another house? Absolutely can do it. Now, if he had enough money in the trust to buy this other house in full, there'd be no new 5-year waiting period at all. It'd be completely protected without even resetting the clock. So this absolutely can be done. My advice is get rid of one trustee and get the transaction done and add the trustee back, and I think you will be in good shape.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Still a bunch to come here on the Financial Exchange, including a little bit of a discussion about whether or not the U.S. is in recession or potentially heading into one. We'll also talk a little bit about, hey, what is the Fed saying these days about interest rates, and are there any changes that are starting to maybe be heard from the Fed as far as where we go from here? And then also, we'll talk a little bit more about the CrowdStrike outage from last week and what it means for that business in the future as well. All that and more coming up on the Financial Exchange.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM-FM. Concord, Boston, the Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is all about retirement tax efficiency. Mike, let's go through some of these items that people typically hit in retirement as key drivers of income. Let's start with Social Security and its taxation.
Yeah, so for only about 40% of American households is Social Security actually taxable, but it's a pretty low threshold where it does become taxable. There's a combined income calculation they put through, and up to 85% of your Social Security benefits can be taxed depending on your income.
Other places that retirees typically generate income, interest from bank accounts and CDs and things along those lines. How is that typically taxed? Any changes for retirees?
Yeah, so no real change other than all of your other income is going to adjust, and so the rate at which you pay might change. But you're going to be taxed federally as well as by your state if it has an interest or income tax on the interest generated from something like a CD. Whereas if you're generating it from some other tool, such as a U.S. Treasury bond, that interest is not taxable, at least at the state level.
What about when we look at IRAs and Roth IRAs? People have been contributing, but now they're finally withdrawing once they retire.
Once again, in most states, federal and state taxes, if your state has an income tax. The one nice thing there is you're not facing the FICA taxes that you paid while you were working, but everything else is coming out of those IRAs.
And Roth IRAs should be tax-free after the money's been in for 5 years. The guide this month is titled Retirement Tax Efficiency. 2 different ways to request it. First, by calling 800-393-4001. Second way is by visiting ArmstrongAdvisory.com. That number again is 800-393-4001 or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts. with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
A little bit after 11 here, it is Chuck, Mark, and Tucker with you, and stock's not looking so great today after a couple of disappointing earnings reports from Tesla and Google, or rather Alphabet. We got the Dow off 401 points, the S&P is down 89, and the tech-heavy NASDAQ being dragged by both of those names down about 2.4% or 430 points. When we look at what is dragging markets, it's a lot of red in stuff that has been good the last couple of years. Microsoft down 2.5%, Nvidia down 4%, Broadcom down 4.5%, Apple down 2.5%, Google down 4%, Meta down 4%, Amazon down 2%, Tesla down 12%. So you got that going on. Some other earnings reports that came out yesterday as well. Visa reported they're down about 4% on some slowing consumer data that they reported there. So overall, the picture is largely the markets are being dragged by a lot of these companies that the S&P 500 is now somewhat top-heavy in, given the recent performance of anything AI adjacent over the last 18 to 24 months. 10-year U.S. Treasury not really budging a whole lot today, down 2.4 basis points to 4.214%. Oil, West Texas Intermediate, up 26 cents a barrel to 77.72. But you've got the AAA national average for gas prices up 1.1 cents as well, even with with oil prices back down in the high 70s. Gas prices hanging on a little bit here at $3.51 and 0.3 of a cent, but still right around that $3.50 mark that they've been at for the last few months. And we've got gold today up $24.90 an ounce to $24.32 and 20 cents. So not much great news out there for equity investors, at least when you look at markets as a whole. And that continues a trend that started really in the middle of last week, where, again, you saw equity markets fall 3 days in a row at the end of last week, Wednesday, Thursday, Friday. And where we sit now, not any huge decline at the moment, but, you know, notable in that, hey, we'd kind of had pretty calm sailing thus far in 2024, aside from a brief period in April where we saw some declines. But you got the S&P 500 just as an example. It's about 3.6% off of its all-time high. Let's not get too excited about 3.6% on, you know, the benchmark U.S. index. That's not really anything to write home about. It might be uncomfortable to look at this, you know, on a daily basis, but just to give it some context, that's not a 3.5% decline is something that you probably see anywhere from like 4 to 6 times a year in a normal market cycle. It's not something that is unexpected. It's something that you should absolutely be expecting as part of investing in equities. The NASDAQ, which is more sensitive to these moves in these AI adjacent stocks, just because it has largely been driven by them over the last year or so, that is feeling a little bit more pain. It's down about 6% off its high. Even that, not really anything to write home about. These are, expected declines that happen in equity markets from time to time. Volatility, as I always say, is a feature, not a bug of these markets. And if days like this are making you, a little bit too concerned about what's going on, it might be worth reassessing how you're investing, because it should not be something that causes you stress on a daily basis. You got to have a plan that works for you both in good times and in times where things aren't going according to plan.
Yeah, medium and longer-term returns have been spectacular relative to history, however long a span of history you want to look at. So, as you say, volatility is the price you pay for those high returns. At least that's how people think about it in finance theory.
Piece in CNBC today: is the United States in a recession? The answer, based on the economic data that we have to this point, is no. But according to a report, 3 out of 5 Americans think that is the case. And this is from a survey that was conducted by a firm. And basically, they surveyed 2,000 adults, and approximately 3 in 5 believe that the U.S. is currently in a recession. According to a separate poll from The Guardian that was run by Harris from May, 56% of respondents then said that the U.S. is in a recession as well. This despite the fact that GDP has been up for the last several years now. You've had net job growth every month during that time. There has been high inflation that has been more persistent than people would have liked to see. But you have an awful lot of people saying, hey, the United States is in recession.
It's astonishing given the duration of the expansion. The economy's been expanding for 4 years, since roughly May of 2020, a little over 4 years. I hate to go back this far, but in the second half of 1992, it was a little frustrating because the economy was growing, but jobs weren't. The jobless recovery, that phrase came into existence then.
Sure.
So it was a little bit more understandable. Unemployment was above 4%. It had been a slow-growing economy for a brief recession in 90-91. It overlapped those 2 years. And then a slow-growing economy with virtually no job growth. It was much more understandable that people would have been down on the economy. Bill Clinton ran on the "It's the economy, stupid" slogan, and he won, probably because the Fed failed to loosen fast enough in response to slow job growth. Here we are, though, 4 years of reasonably strong job growth, of very low unemployment, particularly the last couple of years, though we recently breached 4% for the first time in a few years. 4%, 4.1%, I guess technically, which is where we are today on the unemployment rate, is still very, very low by historical standards. Mm-hmm. It's a rate at which in the past economists would have said, whoa, the economy's running way too hot. The Fed should be tightening, never mind thinking about loosening as they are today. Maybe correctly so. We'll talk about that. So it really is staggering. Perhaps a failure of economic statistics to capture things that really matter to people. Perhaps a failure of the news to communicate the state of the economy is measured by those statistics and to put it in perspective. I mean, how you feel about the economy and what the economy is actually doing are two different questions because we all live it differently. It is astonishing. And again, I don't know where the failure is, or maybe there is none. It's the way people's lived experience is reflected in the responses, and perhaps that's fair. But it is a puzzle. This has been one of the stronger, if not longer, recoveries in U.S. business cycle history because we bounced off such a trough after COVID.
I wish we had someone or something like an entity that polled on this question repeatedly, like so we had kind of a study going back further as to, hey, even in other good economies, what percentage of Americans thought we were in recession during them? Because I would be curious to see how that might have evolved. If you look as an example, like back in the late 1990s, I don't know what percentage of Americans thought we were in recession in 1997.
I can tell you that was never in the news.
What about 2005?
By that point, we had been expanding since the fall of 01. So that recession more or less took up half of 01, couple quarters. It had been over for several years. The stock market and the economy were going like gangbusters at that point. I don't remember, other than partisan sniping, like Nancy Pelosi saying, President Bush, where are the jobs? And we were creating like 300,000 a month.
Right.
So other than that, which you always get, I don't remember any widespread concern, although there were tremors in the housing market that some astute observers were pointing out at that point. There was no widespread concern about the health of the economy.
But I just would be curious, like, in those time periods where the economy was very good, even like you look at, 2017, 2018, even kind of like the 2015 through 2019 period, hey, what percentage of Americans would have responded, yeah, we're in a recession? Because you could poll Americans on what color is the sky, and you get, at least 3% that say, well, it's not blue. And it's just because it's cloudy for the day or something like that. So I'm just curious what the percentage was at those other points.
Maybe 20 to 30%, right? At any given time, if I had to guess?
I don't know. Because
I know. It's a good question. I see what you're saying.
Part of the problem is we don't have a good, easy-to-understand definition of recession. I know that the NBER says, it's a prolonged slowdown across
it's vague,
multiple...
Though. It's vague.
It's very vague.
So...
And so I just look at it and say, look, there's always someone out there who's also struggling economically, and their personal experiences get put into that question as well. And so there are plenty of people who over the last couple of years have had a really hard time because of either inflation or they work in, something adjacent to housing like mortgage lending, and mortgage lending's been in the toilet for a couple of years, and they're like, oh, we must be in a recession. So, I understand that can happen, but what is remarkable is the fact that basically any economic data that we've seen over the last 4 years has been showing pretty consistent economic growth. Aside from the one period that you could point to is early 2022, the first half there, but that was 2 years ago now. And even there, it was, hey, inflation's too high because there's so much demand, not... we're losing jobs because no one wants to buy our stuff.
We all have a reference point problem. There are people who think the price of gasoline is just too darn high. They hate it. They think it should be $1 a gallon. I'm exaggerating a little, but not much. These are people whose memories, like me, were formed in the late 80s and maybe 90s when there were periods when gasoline was $1.
I remember in the 90s. I remember driving down Route 9 and you'd see, there was a Sunoco station there, and I remember clear as day seeing like 97 cents a gallon.
Yeah. In the very late 90s, I forget whether it was 98 or 99.
It was right around there.
Yeah. So for some people, that's their reference point, and anything more expensive than that violates their birthright. Some people are still living in the last century in an economic growth sense. Economic growth grew at about 2 or 3% on average. That's real after inflation per year from the late 1940s through 2000. It's grown at 2/3 of that pace, 2% since then. The difference cumulatively that we lost, if it had continued to grow at the second half of the last century's rate, we'd be 33% richer. That 1% makes a big difference. That's a little bit of a digression, but
sure.
We're not just rounding here.
No,
we would have been
it adds up over time.
Yeah, had productivity been stronger, had labor force growth kept up, or some other combination of factors, which it usually is, prevailed, we'd be a lot richer. And I think relative to the experience of the 80s and late 90s, it has been a disappointing, a millennium century, less dramatically. Maybe that's why it's the cumulative upsettedness at the slow growth, the fits and starts pattern of the current century, present century.
There's part of that that would almost be a great name for a band, like cumulative upsettedness. I feel like could be a nice...
Sounds like a 90s angst.
Yeah, kind of like a grunge band.
Yeah.
Cumulative upsettedness, like straight out of Seattle. I don't know, Seattle just... I understand why grunge came out of Seattle. Let's leave it there. Let's take a quick break here. When we come back, I want to talk about a little bit of new noise that is coming out of people in the Federal Reserve's orbit. Not necessarily the Fed saying it yet, but there's some noise that's being made, and it has the potential to kind of lead to some actual changes over the next few weeks here. So let's talk a little bit about that. We'll also do trivia when we return.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zodda from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to STOP.
This message furnished by the National Association of Broadcasters.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's Eating Good in the Neighborhood. Void where prohibited. Dine in only. The first Olympic Games in 1896 featured 43 events across 9 sports. The 2024 Olympics will feature 329 events across 32 different sports with one new addition to the slate. Trivia question today: which event will make its debut at the 2024 Games in Paris? Once again, which event will make its debut at the 2024 Games in Paris? Be the 5th person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 5th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
So, we've got something kind of meaningful here from Bill Dudley. Bill Dudley was the president of the Federal Reserve Bank of New York from 2009 to 2018. And why this matters is when you are the president of the Federal Reserve Bank of New York, you're basically like the number 2 or 3 honcho at the Fed. Is that a nice way of putting it?
When the Fed says we're raising interest rates, they don't actually raise interest rates. They flood the market with reserves.
Yeah.
And they influence them indirectly.
They manage it through
so
that.
They'll call the Fed Bank of New York, who, among other things, executes open market. You've heard open market. I don't mean you, Chuck, I mean you in the audience. Yeah, everybody's heard the word open market operations. New York Fed does the open market operations. So, yeah, they're influential.
So, Bill's got a piece today in Bloomberg, and I'm just going to read it because it's very clear what he's saying. I've long been in the higher for longer camp, insisting that the U.S. Federal Reserve must hold short-term interest rates at its current level or higher to get inflation under control. The facts have changed, so I've changed my mind. The Fed should cut, preferably at next week's policy-making meeting. Again, Bill's kind of a big deal in the monetary policy world. When he comes out and says, look, the Fed needs to cut next week at the July meeting, it means something. And I'm wondering if this is basically being floated as a trial balloon to give Jay Powell some cover to be able to say, yeah, you know what? We've been looking at the economic data. It's continued to worsen since the last meeting, and we think the risk of waiting until September is now too great, and we need to move now. Because the Fed likes to have some kind of signal out there beforehand in terms of, hey, here's what we're going to do so we don't surprise markets. Jay can't send that signal now because the Fed's in their quiet period. They're not allowed to say anything heading right into a meeting, which is, a week away now at this point. And so it's something that in my mind, hey, if you have someone who previously ran the New York Fed who's coming out and saying this, I'm wondering if it's being, leaked from current Fed members who want to get this out there.
Yeah, this is like George Clooney this is the monetary policy equivalent of George Clooney telling Joe Biden, get out of the race.
It's got that vibe to it, doesn't it?
Like, you need to cut rates now. Trust me on this one. He's a luminary, like a grandee, whatever the right figure is for someone with a lot of gravitas and who has the respect
He's
of
a missionary.
Everybody.
His voice cuts through the noise on this stuff.
It does, and he makes some good points. It's, of course, impossible to say whether or not policy's too tight. Growth still appears to be strong, though it's slowed, but there are things pointing to slowing growth, and we know that Fed actions take effect with a big lag. So if we're going to be in recession a year from now, in theory, you start cutting today.
The impact of this, best that we can figure out, the CME runs a FedWatch tool that that charts probabilities of different rate paths. Yesterday, it was pricing in a 4.1% chance of a rate cut in the July meeting next week. It's now pricing in a 6.7% chance. So, again, still not likely, but given that meeting is now a week away, I do think a lot of that's coming from this because it's not like we got that much economic data this morning that's meaningful in any real fashion. There definitely is a slowing happening in the U.S. economy. It is the type of slowing that if it continues for the next few months, you start to really worry about recession possibilities in Q4 or Q1. And Dudley at least saying, yeah, you better do something because he thinks that that's what's coming. Let's take a quick break here. When we return, we've got the trivia answer.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutsky and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
There are many factors to consider when planning for your retirement, including the importance of your tax liability. This is Mike Armstrong from the Armstrong Advisory Group. Reducing tax liability can be potentially more effective than chasing higher investment returns. If you are nearing retirement and need to understand how to help your investment approach and limit your tax liability, call us at 800-393-4001 and request our new guide called Retirement Tax Efficiency. We'll educate you on ways to create a tax-efficient strategy, as well as the basic steps that make up a sound retirement plan, including how to protect your money in a down market. Call 800-393-4001 and get your guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, which event will make its debut at the 2024 Games in Paris? That would be break dancing. Yeah, that's right, break dancing. Sam from Harbor Creek, Pennsylvania is our winner today, taking home a Financial Exchange Show t-shirt. And Sam's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood. Void where prohibited. Dine-in only.
Unrelated to anything about monetary policy, but if you want to feel old today, Barry Bonds turns 60 today.
Nomar turns 51.
It's not 60.
Yeah, I remember Nomar was, my hero growing up in his 20s, so I do feel old today.
It's true. But yeah, Barry Bonds is 60.
Wow.
Yeah, just wanted to put that out there. So, before the last break, we talked about Bill Dudley, former New York Fed president, saying, hey guys, you better cut rates because otherwise you're going to be behind the curve if a recession, happens later this year. We also have a competing piece, this one in Market Watch, and this one is from Michael Strain, who's the Director of Economic Policy Studies at the American Enterprise Institute. And the headline here is the opposite. September rate cut would be a mistake, not July, September, setting back the Fed's inflation fight. And the point that Michael makes is, hey, you still have an economy that is basically situated where you're not going to get inflation down to your 2% target. He says it's probably going to be somewhere between 2.5% and 3%, and you don't want inflation to get stuck there. I'm not sure of a couple things on this. The first is the 2% target, I am sure, is dumb. We've talked about this at length for multiple reasons. The first being that inflation has never averaged 2% in the United States. Ever. If you look at the 2010s, it averaged 2.2%. If you look at the 2000s, it averaged 2.6%. If you look at the 1990s, it averaged 3%. It has never been at 2%. And obviously, look, the 80s, 70s, and 60s, it didn't either. So the 2% target is dumb for one reason, which is, hey, we've never actually averaged 2% for a full decade. The other piece is there's nothing to say that 2% is inherently better than 1.5% or 2.5%. Like we don't necessarily have anything in evidence that suggests 2 is that magic number to begin with. And I'm not saying this because I want to let the Fed off the hook. Anyone who's listening has known over the last few years we've not really let the Fed off the hook on much. But my point is, look, you can still have a good economy with inflation in the 2.5% to 3% range. Where you don't want to stagnate is kind of where we were in the first half of this year when it was dangerous, where, hey, if you kind of bottom out at 4, yeah, now you're in a pretty dodgy spot, and that has big implications for, the long term as well in terms of, hey, if inflation's running at 4%, you got prices doubling every 18 to 20 years, whereas inflation running at 2%, prices are doubling every 34 to 36 years. Your thoughts, Mark?
Yeah, for years, the Fed has had the official inflation target came about in 2012 under Bernanke. He thought it would be helpful because the Fed had already gotten inflation to around that level. To your point, it bounces around. But it was low to the point where nobody really thought about it in their calculations, which is the definition of price stability. I don't think about inflation, therefore it's not a problem. Before that, they did have a target in mind. They just didn't articulate it. Greenspan, who's probably the most legendary Fed chair of our era, famously warned the FOMC, do not let a 2 or 3% target get out there. We're screwed if you do. Because he understood that that would back them into a corner in the event that they needed more flexibility, say during an economic emergency. So probably a mistake in retrospect to articulate a hard and fast point, single estimate rather than, say, a range or something even more vague. And I suspect we'll get back to that at some point. It won't be 2% forever. So while it's arbitrary, there is good reason behind it, which is to keep expectations low. Expectations are a key component of the inflation process. There's also the demand component when the economy runs too hot, which is what we use unemployment as a proxy for and other things. And then, of course, there are the occasional supply shocks, but they tend to be fleeting. So expectations are critical, which is why the Fed articulates that goal. But it may be working against them, and that inflation may be low and stable enough that people aren't thinking about it every day anymore, or fewer people every day anyway are. We're still in shock from the big jump. But now they're hamstrung because they don't feel like they can cut when a rising number of economists think they ought to, because there is some evidence the economy is slowing, but they're not quite at their 2% target. To make that sacrosanct above all else is also it's as much of a mistake as letting inflation run in 2021 was.
The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. The summer heat is upon us, but the holiday season will be here before you know it, so make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean Paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
The hottest job market in a generation is over. That's the headline from the Wall Street Journal, and it matches what we've seen in the economic data, which tells us, yeah, you still have a job market that, if you saw it in any other context, you'd still say is hotter than it's been in the last 20 years, but you're not seeing the pure craziness that you saw in 2021, 22, and 23 in terms of companies falling all over themselves to try to hire any employee that they could for just about any role also.
So unemployment is up from 3.4, the low of last year, to 4.1% today. Payroll growth, that month-over-month figure that we report, has slowed. The number of job openings relative to the number of unemployed people, that vacancies to unemployed, a way of thinking about supply and demand for labor, has come back down to pre-pandemic levels by any number of measures that economists like to put into their models that try to gauge whether or not the economy is running in excess of its speed limit. Just going back to that concept I mentioned in the last segment, where the inflation process is explained by expectations, some measure of output, some measure of slack in the economy, then supply shocks, which we're putting over to the side for now, by the employment market measure of slack, things have loosened up. Therefore, inflation should be slowing. And lo and behold, inflation has slowed over the past few months. So things are working out. People were ready to discard the so-called Phillips curve, named after the guy that first made the observation that, hey, when wages go up, inflation goes up. This is interesting, or maybe these things are connected. And since then, it's spawned a whole industry of research. But that framework, which people were ready to dismiss because of the odd supply shocks of the COVID era, seems to be governing the way things are unfolding again, which is why Bill Dudley, in the last piece we covered, is advocating for rate cuts.
Let's take a quick break here. When we return, it's time for Stack Roulette.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Tax-efficient retirement planning starts with taking proactive steps to minimize your tax burden while you still can. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and as you approach retirement, it's crucial to consider the impact of taxes on your future finances. This month, our new guide is called Retirement Tax Efficiency. In it, we cover a variety of key areas from Social Security and life insurance to capital gains tax rates and Medicare brackets. The guide is designed to help you build a solid retirement financial strategy that limits your tax liability. Get your free copy of our new guide, Retirement Tax Efficiency, by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
There's an issue cutting through the partisanship in Congress. It's AM radio. The overwhelming majority of legislators, Democrats and Republicans, support a bill to keep AM radio in cars. But time is running out. Text AM to 52886 and ask Congress to bring this bill to the floor for a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. Help us support these great American heroes by visiting DAV5K.Boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit DAV5K.Boston. The DAV5K Boston is presented by Veterans Development Corporation.
All right, Mark, what do you have for me for Stack Roulette?
Not great news for coffee drinkers.
No.
Yeah, did you see that? You guys drink coffee, right?
I don't.
You don't drink coffee? Oh, so you don't give.
I do.
I don't believe in coffee.
Imagine
drinking
that.
a little bit right now.
What's that?
I'm drinking a little bit right now.
How is it?
Normally,
What do you mean you're drinking a little bit? You're either drinking it or you're not.
I'm nursing it, is what I mean.
Okay.
I mean, I'm not a coffee aficionado. You're more of a...
Yes.
You're a regular, as is evidenced
Tucker, what's
by
your favorite
high-strung
bean?
Oh, I don't know. I'm not a bean guy. I don't
Not a
know.
bean guy.
No.
Well,
I
apparently
like the dark roast.
There are different varieties. This article mentions them in the context of spiking prices. Arabica or Arabica?
I think it's Arabica.
Arabica, yeah.
Okay. Arabica, Cadabra, and Robusta. Okay, the former are the more exotic variety. Starbucks uses them, for example. Anyway, spiking in price, though, the article oddly may call my judgment in Stack Roulette into question. Doesn't say by exactly how much.
No, it doesn't.
Did you notice that? A paragraph. It's this ponderous article. It goes on for 4 pages. I'm looking for data or a chart or something. All I can tell you is they're going up, both varieties, the cheap variety and the more expensive Starbucks type variety. But over the past few years, or since 2020 really, when prices on average, as we all know, have gone up by a little over 20%, coffee has kept pace. So no more, no less expensive in relative terms is coffee compared to everything else. In fact, in the past year and a half or so, coffee is down in an absolute sense now. I'm switching gears a little bit here, 3%. But that apparently is about to change. So if you need coffee, stock up, I guess is the message.
The unfortunate thing is that you can't grow coffee trees in the United States.
Even indoors?
Maybe you can indoors. I don't know, but
okay.
otherwise you don't have the right combination of like temperature and humidity. We're just, even like the southern part of it is too far north to be able to grow them effectively, I guess. It's basically Central and South America is the narrow band where you can grow coffee. And so it's not something where the solution is, I'll just plant a coffee tree. No, it's not going to live in New England. Like it's just not going to work. So I don't know. I guess this is another positive of not being a coffee drinker for me. So I'm fine with it if the prices go up.
Yeah, this is the type of thing. Demand is somewhat elastic for something like
Do
a
you think
typical
it is elastic?
drinker. Well, of course, it's addictive. I guess what I was going to say was if you're a Starbucks drinker, you can downshift if it gets prohibitive, probably, or start brewing it at home. There are options.
Tucker, as someone who you've shifted away from Starbucks as
I'm a Dunkin' guy now.
How big of a decision is it to change where you buy your coffee? For someone
Not
like
hard.
me who doesn't understand.
No, it's not hard. It's just a matter of location and proximity to me and pricing.
How long did it take you to get comfortable with the taste and the offerings?
Fine. If as long as it hits the spot and gets me caffeinated, does its job, I'm fine with it.
You definitely sound adequately caffeinated.
Yeah. Talk to me again at 2:00 this afternoon. But no, I mean, I've said it before. The Super Bowl marketing campaign won me over. And I was just like, you know what? Yeah, the Dunk Kings and that whole campaign. And they have another one out with Will Arnett and everything. They just completely won me over there. I thought it was genius. And I was like, you know what? I'm a Dunkin' guy now after that. Love it. And it's cheaper, too. It's still, the drip coffee is not expensive. It's still under $3 for the most part. It's the espresso stuff and the cold brews where you're paying upwards of $5, $6 or whatever.
I don't understand why you pay more for cold brew.
So I don't either.
Isn't it less work to make? You basically just put it in somewhere for a day, right?
So this is from this is a separate item from the Huffington Post. I was reading this morning, and they quoted CEO of a California-based roaster called Klatch Coffee, and she said, quote, "Cold brew is one of the worst margins for a coffee house in general. Cold brew is one of our most expensive items. It's the item that's consistently underpriced, but everything else makes sense from a business perspective." So
I'm trying to figure out why. I mean, I guess there still is energy usage. Well, let me ask you this: cold brew. Do you actually have to make that in a fridge, or can that just be made out on a counter?
So you have to make it on a counter, but then it gets put away in the fridge, and it goes there overnight, I believe. But apparently it's not a moneymaker there. It says your espresso is your biggest cost. Espresso is more efficient than pour-over, but still not as efficient as a batch brew. So
I would love to spend like a day at a coffee place understanding the economics of that.
Right.
Just to figure, because the intuitive answer is cold brew should be cheaper because you don't have to use all of the energy to heat it and yada yada. But there's got to be something else that I'm missing on this.
All right, I'll do a little research on this. I will ask our local coffee shop, and I'm there every Sunday, so I talk to those guys, and I'll ask them.
I guess you do have to have the space for it for a longer period of time, and so that can obviously add cost, I'm sure. But I'd be very curious to hear where the cost is on that because...
Well, yeah, now you're seeing these nitro taps. It literally looks like a beer tap, but it's a tap, and it's a whole nitro thing. I don't know. I'm not a big nitro
Wait,
cold
so
brew
it's like carbonated?
It's not I don't think it's carbonated. No, it's not carbonated. I don't know what it is, but nonetheless, it comes out of a tap.
Because isn't the thing with nitro beers that it's like a different size and shape bubble, so it feels different from carbonation?
That I don't know. I don't know.
It's all getting a little too complex for me as someone who doesn't drink coffee to begin with.
So a texter out on the 978 said cold brew takes more coffee to get the same effect.
Oh, okay. There you go.
Hence the margins.
That I can totally buy.
So
Interesting.
There you go.
Mark, when's the last time you used a check?
Probably
not to buy coffee, but for...
pay property taxes maybe.
Tucker, what about you?
I don't, but my wife still does because she is too lazy to get the auto debit from her bank for her car loan. I said, "What the hell are you doing? Stop using paper checks. Just go online. It's a whole thing." It's an argument we have once a month.
I use them on a fairly regular basis for... It's fine. I'm just
doesn't take much to set him off.
I'm just gonna let
I would have thought that topic
it really
was pretty
doesn't.
benign.
I'm just going to let it slide.
Oh, it bothers me to no end.
Not getting involved.
Take my side, Joe.
There might be deeper issues.
Well,
there,
I use paper checks on a pretty regular basis. Mostly for contractors or people doing work around my house is kind of the place where they get used, and by frequent basis, maybe it's like 2 or 3 a month. That it might be.
It's a lot.
I have someone who comes in and cleans the house once a month just because with 2 kids, it's like, hey, we gotta have some sense of normalcy here. So they get paid by check. Or if I'm away for a week or 2 and I need someone to mow the lawn, okay, they get paid by check. So it's stuff like that pops up. But admittedly, when I was working, my first job ever, I was a cashier for Stop and Shop. And there was absolutely nothing worse than the 1 out of every 100 people who would come in and try to pay for their groceries with a check. Because you'd have to run it upstairs to the manager who then would figure out okay, can we actually accept it? It was a whole big thing. And you've got more and more places now that are stopping taking checks. Target just stopped accepting personal checks as a form of payment this month as an example.
Good.
And it's because it is kind of a pain to process them. It's kind of a relic from
whole lineup.
A whole different era. And what I will say is a lot of contractors now I am seeing moving to electronic invoicing where it's through QuickBooks or PayPal or something like that. And boom, you're done electronically, either just via, a bank debit or via credit card or something like that. And it's pretty cool and easy to be able to keep track of it that way instead of, hey, did they, balancing my checkbook still is not something I want to do.
Checks can be stolen and fraud can be committed.
Market's still down. We will be in tomorrow to check on them. Tune in tomorrow on the Financial Exchange. We get GDP data coming out as well.
Tax